Hi friends, welcome to one more video from Urban Trader. Today let's understand how we can stop losing money trading manually and if you're not a pro. So let's get started. To understand, let's begin with 5 pillars of trading. We think trading is very easy. It's something where you can click on a mouse and trade get executed and you can make money. But there are nuances in terms of how actually you can be profitable and make it trading and make money out of it. So let's cover those here. Uh, the 5 pillars of trading are basically this. Entry point, trade management, risk management, trading psychology, and win loss ratio. Entry point is basically how far we are from the trade positions when the signal comes through. So generally what happens is a signal can throw up, or on the chart it might show that signal has come, but you take up the position later, so that it might not become a profitable position. Trade management basically talks about in terms of how do you manage the trade while you're already in the position. Let's say you want to add up positions, do pyramiding, or you need to do partial booking, or you need to exit at what position, how to take a partial profit, certain areas like that. Risk management, this is something where basically you need to decide how much you're going to lose and how much you're going to win, and to gain so much, how much you're going to bet on, so that you're still profitable over a long period of time. The other topic is basically on the trade psychology. This is the most important also, because while we look at the charts in the past, we feel that these are the trades which we could have taken, but while we are on the trader, when we are during the trading hours, when we want to take a trades, emotionally we get influenced in terms of greed and fear, and sometimes we don't even take a trade. And even if we take a trade, we end up losing trade because of our emotional influence, or we might over trade and then lose a lot of money. And the fifth pillar is basically the win-loss ratio. This is something which least talked about in the trading community. We talk about mostly on the risk reward, but win-loss ratio is the other pillar which actually influences in terms of whether we make money or not. So let's take a look at this. Challenges in terms of trading manually is indicators shows we generally do with multiple indicators. Either we use moving averages, VMAP, or you can do moving average crossover, or some oscillators, RSI, MECD, multiple way we can use them. But as a combination of that, it shows multiple entry point, and we might not take positions at the right entry point, and it might end up losing trade. The other issue with the trade management is there's no fixed method in terms of how do we manage, because it's dynamic. The charts will show dynamically in terms of how the price is moving, and we end up not managing it in the right way, so that the positions will still become losing trades. Risk management, this is something because it depends on the trade setup, and sometimes we don't have an influence in terms of what should be the risk reward ratio, and hence the trades can turn to losing trade. And the trading psychology, as I told, we end up trying to recover the loss, and there's no discipline, and we overtrade sometimes. And the way we think while we are on a trade and when we are just analyzing the chart is entirely different person. So it has a lot of influence in terms of the way our PNL gets reflected over a period of time. So, and win-loss ratio, it's very hard to measure win-loss ratio in the manual trading. So if somebody is doing a ledgering in terms of how the trades are happening and how he is actually tracking the trades, only then you can measure this and to quantify. Otherwise, these are impossible or very difficult to track and manage while you're doing a manual trading. Let's take an example, and then maybe we can come back on this. Thank you. Thanks for subscribing to Urban Trader. Let's move on. How algo trading can help in this case instead of manual trading is, in algo trading, entry can be decided on the logic and it's accurate, so that you need not to track multiple stocks to trade, and you don't need to feel that missing out on the trade positions, where to take the position, and there's no feeling of missing out. So that takes care of right entry position. In terms of trade management, there are multiple ways you can manage this, pyramiding, partial exit, profit booking or exit. So these can be coded, and that's how it can manage the position dynamically. So you need not to worry while you are on the position. So trade itself, or the algo itself, can manage the trades well, better than what we think while we are on the position. Risk management, this is something important in terms of algo trading, because you can define an algo with a predefined risk reward ratio, and it can be decided even before you take the position itself. So you can see that take the position at right position, and then if your risk is, let's say 1% or 1.5% of your entry point, just get out if it goes down, and you can always come back instead of holding on to position thinking that it might come back. So that's the better way where you can cut losses quicker and manage the trades well. And trading psychology is something, since the trades are taken purely by computer and it's an algo driven, there's no emotional bias. And most of the time what I have also seen is, when the algos are running, I end up tempted to tinker the algos just because looking at the profit, just to do partial booking or profit bookings. But if you let the trade to take care of itself, it will manage better than we interfering in the algo. So I think it's best to let the algo decide and manage it than we in interfering in the algo trading. So that's much better than doing a manual trade. And in terms of win-loss ratio, I think this is something which we can always measure in the algo trading. You can build and test them as a back testing over a large number of data, and you can confirm that how the behavior of the algo is, and then you can also go back and do the forward testing. And once you feel comfortable, then you can start deploying the code and track them and measure how the PNL is working. So that's a better way to look at in terms of how the. Let's review this chart. This is the common setup most of the people use in trading community. So we have VWAP, and moving average is 20 and 200. Then you have the MACD down, and then the RSI. So I'll not go into deep in terms of each of these indicators, but if you look at this chart, and if you see that manually if you want to trade, maybe what we could do is we can think of taking a moving average crossover, we take here and we sell, but it becomes choppy while we are trading here. And even if you take a VWAP, the VWAP looks good here, but how about here? It gets choppy. And since MACD and RSI are oscillators, so they don't give the right way to figure out what should be the entry and exit, because they throw up multiple entry exits here. You can see the same thing here. So what happens is you end up taking multiple trades, and that has a lot of influence in terms of your win loss, because the moment you take a trade, you're already in loss, because you need to pay brokerage charge, and there is always a problem that you might lose it. So there is a high chance of losing money than making money. And manually, if you look at this setup, which is on the bank nifty, you can make a couple of profitable trades here if you look at, but you end up losing here. But if you look at the same bank nifty on the algo which I have developed, if you look at this, typically shows there's an entry point and there's an exit point, and you're just out. So it'll take out all the noise, and it knows how exactly it has to be done. And maybe just to mark you, this is the trade, this is the entry, and this is the exit, and you're out, and you will take a profit out of it. And if you look at the strategy tester, this is how it shows whether you made money or not. And this is the strategy which I have built in, and it can show in terms of, you can see here. So this is the profit it has made on one single lot of bank nifty. And if you look at the performance, you can always measure the performance and see what is your risk reward ratio and how much is you are losing. So if you look at the profit factor, it is basically your risk reward ratio. You can consider it's 2.3. That means every time you're going to lose, when you win, you will win 2.3 times of your lose. So that's how you're going to make it will become profitable. So if you look at, though you have lost money here and you have gained, net to net it's always be profitable. This I'm showing it on the 1 minute, so you can do it on multiple time frames, so it still shows the positive result. And this is how your equity curve would show. And at any point of time, if you see that because your profit factor is good, which is more than 2, you will always end up making money. and you let the trade happen via systematic way, and it will take care of the trade, so that you don't need not to worry about uh, whether you need to do trade manually or not, right? This is one of the way where Algo can help you. Maybe I'll talk about in terms of win loss ratio a little deeper, so that it helps you understand how to move or transition from manual trading to Algo trading and how that can help. Let's look at that. Let's review this template. This is basically the template which I use to analyze win loss ratio of algos which I develop, and this is basically on the bank nifty future trade. Let's say I assume that you would trade 20 trades per month, each one trade per day, and number of lots is 1 and lot size is 25. This basically measures in terms of what is the risk reward ratio, 1 is to 1 to 1 is to 4, and the win rates vary from 20% to 70%. What this basically depicts is, if you have any win, now risk reward ratio is 1 is to 1, you need to have as high as 60 to 70% of your win rate. Only then you can start making money. And also note that you also end up making cost in terms of brokerage costs, so you end up making very less when you have 1 is to 1. If you have 1 is to 2 risk reward ratio, your algo should be at least 40% and above in terms of your win rate. Only then you can start making money. And if you have 1 is to 3, I think that's a perfect spot to be in. Even if your win rate is at 40%, you end up making close to 25,000 rupees on a single lot per month, and this is close to about 14%. This is too high actually if you look at from the standards. And on day-to-day basis, when you look at it, the number looks to be very less. It's about 1,200 rupees per day, but it'll add up to 25,000 over a 20 trading periods, and this is just on one lot. So what generally people do when they do intraday trading is they increase the lot size, but if their win loss ratio is less, irrespective of your win rate, they will not make money here. So that's the reason they end up losing. So take care, when you're increasing your lot size, it's not about how much money you deploy, but when you deploy more money, when you have your win loss ratio and risk rewards are high, only then you can make money. So I think it's a good way to take care of this. And if you have an algo, you can always do back testing, analyze, and only then you can deploy the cash. That's a better way, where you can take an edge instead of doing a manual trading. And this is how it shows that algo trading can stop lose money, but when you do manual trading, you end up losing if you're not a pro. So take your trade well. It's hard-earned money, so better take care of that cash, the trading capital what you have. And thanks for watching the video. Take care.